Node projects spawned a new generation of project on crypto and really kind of changed the game of, how passive income works and how much money really can be made in crypto passively. But there's a fundamental flaw that makes node projects fail, and you see it time and time again. And I've covered projects that I thought would last, but ultimately ended up failing as well. The fundamental flaw that comes down to node projects is a few things. One, obviously really unsustainable rewards, but the main thing being sustainability in general. Node projects generally solely rely on Ponzi mechanics, thus needing people to constantly enter the project for other people to get paid. You see this in many projects tokenomics where 70+% of all the money going into the protocol goes out to current users, and this applies to strong nodes, and this applies to Thor nodes. This applies to a lot of the node projects that seem sustainable, that have solid developers and a solid team, but ultimately the principle in which those projects are built upon is a model that's not sustainable. You can see Strong trying to get out of this model with Strong Chain, bringing in another source of income to the project. You see Thor nodes investing money into other projects and staking tokens to gain some sort of revenue for the project to be able to pay people out. You see them doing things to make their project more sustainable, but the problem is still there that it's built upon an unsustainable model. The only way you can truly succeed in most node projects is if you get in very early. If you get in very early, the price may spike and you hit your ROI, you're done, and now it's just passive income. But what you have to understand is that all the people that get in late, that's the passive income that you're ultimately taking. The people that come in these projects later are the passive income providers, and this in turn makes the project unsustainable. As less and less people begin to enter the project and more people are pulling profits, the project eventually cannot sustain itself. Well, this is where Dominium.Finance comes in, being the first crypto project in history to be backed by real-world assets like real estate. This project also will dynamically allocate tokens in order to keep the price at a certain range. That way the project never reaches an unsustainable 10x figure and has to pay now a 10x to its users. Guys, this project is very deep, it is very complex, but in its simplest form, that's what the project is. I'm gonna show you a brief overview of their Medium article, which is essentially their white paper broken out into a very solid read. So if you wanna get more information on that, check out their Medium article. I'm gonna be going over that as well as the website, their DApp, how everything works, how you get paid, what you have to pay. Guys, this is going to be a detailed video, so stay tuned. This is Dominium.Finance. What's going on, everybody? It's Kolev. I hope you are having a great day or night, whatever time you're watching this video. That was a very long intro, I know, but this project is very interesting, very intricate, and I think is truly a game changer when it comes to node protocols in general. There's nothing quite like this. Now, this project is still developing. It's not completely finished, but once you understand the principles of this project and how it works and what it plans on doing and what it currently has, I think that you can really see the value that this project provides for not only long-term sustainability and passive income, but for the crypto community as a whole. Let's go ahead and jump over to Dominium.Finance's website and see what they got going on over there. All right, guys, so this is going to be Dominium.Finance's website. It's going to be dominium.finance. Again, dominium.finance. Do not go to any other website. Do not get scammed. Please do not get scammed. All right, so elite passive income backed by real assets. Again, there are very few, if any, node projects that are backed by real assets. This is something very unique to crypto, very unique to nodes, obviously. And we're going to dive a bit deeper into that later in this video. Mint your Dominium citizens for universal basic income. So on a brief overview, if you want to look at this project in its most simplest form, you have NFT nodes, and those NFT nodes provide you passive income. Clicking mint now is going to take you over to the 3 NFTs that they're currently offering, starting at $130 or 22 of their DOM token, $1,300 or 220 of the DOM token, or $13,000, which is about 2,200 of their DOM token. And then right under that, you got their rewards every day. Now, at first glance, this just seems like an NFT node project, and there's not really much to it. But I think once you start understanding the mechanics of the project, how it works, the real life, crypto assets that the token is going to be backed by, and then you see the resulting outcome in the chart, I think you're going to start understanding what this project is really doing. Now I'm going to mention another NFT later in this video, but we're going to go ahead and go back to the homepage. Scrolling to the bottom, you can see some of their partners, Get Stay and Red Swan CRE Marketplace. And at the very bottom, you can see their KYC. They're KYC'd with Assure, one of the most reputable KYCers in the crypto community. Now also here at the bottom, we're gonna have their Twitter and their Discord. We're gonna go ahead and go over to their Medium article because this is going to explain a lot about the project, the problem, and the solution that they are providing. So in a nutshell, everybody wants passive income. Nodes have been a great avenue for many to obtain this. We have guys like Node Baron, who literally lives off of node rewards and hands out new MacBooks with built-in nodes like they are candy. The problem is, in reality, new node buyers are just supplying the passive income for these OGs. Quite a few whales are buying strong at $50. Later, an investor comes along and purchases the same node for 10x or even 20x that price, yet the node pays the same amount. Again, this is, like I said, the problem with static rewards is that no matter what the price of the node is, you're always going to get that fixed price, which is terrible for sustainability because it's more money that the protocol has to pay out to its investors. So a few things have become very clear. Node holders become an unsustainable liability to the node community. When you are late to the node game, you are the passive income provider. That is the most true statement that I've heard about how node projects in reality are, and it's really sucky to hear, but it's just the truth. If you don't get into most of these node projects early, then you are literally going to be the one providing income to all the people that did, and that's the fundamental problem. It relies on Ponzi mechanics, and until projects get away from that, they will always be unsustainable no matter how much income they think they're bringing in. This isn't to say that node projects aren't a great idea. They really are. People that wouldn't touch Bitcoin with a 20-foot pole in 2016 love the idea of nodes. Make passive income online via some blockchain tech you don't understand. Sounds too good to be true. That's just how nodes work. What we need as a node community is to simply make it legitimate, cut the fat off, and get straight to the meat. We can absolutely come together to invest a large sum of money for a higher return than its constitute part would yield. We as a community can participate in larger investments and thus higher returns when we join forces. Nothing magical here. This is truly DeFi as a service or revenue as a service. You pay Dominium to pay you dividends. Think of it like a bank. They give you 0.04% APR. They loan your money for 11% and profit the difference. This legitimate business venture for them. We actually are just paying out the profits. The difference here is DeFi. Huge gains are possible, and we have 7 years in the space behind us to headhunt for you. Our goal is 30% APR for years to come. APR is higher for the first 12 months as a bootstrap financing campaign. Dominium promises reasonable returns, no magical 3,000% lifetime rewards. We will buy real property that will cash flow for generations. Those who invest in and hold an NFT and our DApp will receive those rewards. Now that's the huge thing here, right? They're not claiming that they're gonna get you these 25% gains per day, 100,000% APY. They're a reasonable, solid, 30% or whatever percent that may be in the future, but a reasonable percent that you'll be able to net, per year, APR. That is something that's also a sustainable figure to be able to pay out to people. Now the tokenomics of this project is really the driving factor and also the main difference in this project that most other protocols do not do, because most other protocols have a static tokenomics where certain tokens are allocated there, and this percentage is hard coded, and that's it. They are very dynamic. They are very variable in how they do their token distribution. And this is also what allows the project to be so sustainable. We cannot accomplish this goal with bad tokenomics. When providing a viable product, the product has to be good for the next guy as it was for the first. When protocols only benefit the early, they are destined to fail. This is why we have derived an entirely new tokenomics model. We have brought the best of DAOs and nodes coming together. Olympus DAO was revolutionary for a few reasons. The protocol owned its own liquidity, a treasury to support the token, mechanics to increase, decrease token supply to meet the community goals, And of course, Olympus DAO is essentially where node projects get their model from. It's where they get the treasury from. Olympus DAO is essentially the godfather of what ultimately nodes became for these specific reasons. Strong Protocol brought us nodes, a community that puts passive income first. Investors lose their initial investment and thus are granted community members. Both protocols had their issues, and many of their copycats have ended up in ruins. We have studied each of the originals exhaustively and have witnessed protocol after protocol fail to create sustainability. Finally, after months of studying and chasing, being rugged, etc., we've decided we must do it ourselves. We present to you Equitas, a logical and simple solution that accomplishes the following: creates a much longer runway, protects and incentivizes the later buyer or compounder, provides standard and predictable metrics for the protocol's success. Now, new buyers are protected from paying a large premium on old buyers' bags. We're providing a real investment product here. There's no reason for Pat to pay $10,000 for the same investment property Joe bought a week ago for $1,000. Fundamentally, the problem with node projects is that difference when the project can 10x. Now the protocol is going to have to pay the 10x price to all of its holders since their rewards are static. DOM's NFTs will be sold via USDC and their own native DOM token. This gives them control of them being able to buy back tokens and gives a reason for people to buy DOM tokens or not, with the option of USDC. Now, they had a whitelist edition of the project as well as a pre-sale edition. These NFTs are no longer available, but they do have the Gen 1 like we went over a little bit earlier in the video. Now, I'm sure this project may seem very simple or it may be very confusing to you. I'm going to read this last part to try to kind of get you to comprehend exactly how this protocol works, and we'll go ahead and get into going back to the website, buying an NFT and staking that NFT. Now notice, at a starting price of 4.6 DOM, minting an NFT in DOM rather than USDC is 30% cheaper. Equitas works as an automatic price and supply balancer. If the price of DOM token rises too quickly, market participants will use USDC rather than DOM, reducing the buy pressure. If the price of DOM falls, market participants will use DOM to mint NFTs, increasing buy pressure. Over time, the price of DOM will increase and the cost of DOM for an NFT will decrease to maintain price points around $100, $1,000, and $10,000. When NFTs are sold for USDC, the USDC goes straight to the DOM USDC liquidity pool. This will have the same effect on DOM's price as a DOM market buy would. For example, $1,000 can be used to buy 220 DOM and then the NFT for 220 DOM, or we can just take $1,000 in exchange for the NFT and add the $1,000 to the liquidity pool. Both paths have the same effect on DOM's price. The latter helps promote longevity and sustainability. The portion of USDC that goes to the liquidity from NFT sales, tuition, and the tribute fees will calculatedly adjust to enforce the DOM token's stable price appreciation. These functions will be leveraged to balance the price action during the first year of the Dominium ecosystem. Our goal is to keep the DOM price to 20% growth per month. This will benefit the project by enforcing steady growth, creating a chart that is inviting to new investors, protecting later investors' buy-in power. Now guys, this project gets really in-depth, and this video will be extremely long if I just went through the entire white paper. So please definitely go over to their Medium article, read everything there is. This is the most up-to-date. They do have a white paper on their website, but the Medium article at the moment is their most up-to-date information about where the project's at and where its future plans are. I hope what I explained helped you understand the project a little bit better. Let's go ahead and buy an NFT now. So now we're over here on Dominium's website. Let's go ahead and actually look at the chart so you can kind of see what has been going on so far. So this was the launch back on March 19th. And as you can see, it's been staying pretty steady from a low of about 4.1 to a high of around 5.7. This is what you want to see in a node project. You want to see, sort of flatline price. You don't want the project to go super high up because now the project's gonna have to pay out more, but you don't want the price to go super low because now it's gonna be worth less. So this is what you want. Their link to take you straight to the chart allows you to quickly be able to buy some DOM tokens. So I'm gonna quickly show you how to do that. You can go over to trade on Uniswap or simply go to Uniswap's website. It will auto-populate the DOM token right here at the bottom. And I'm gonna buy some with Matic. You can use obviously anything on the Matic network. I'm gonna throw another 50 Matic into the bag I already have. Swap it. Transaction submitted. Now we should see it populate down here pretty soon. And there we go. We got our DOM tokens there at the bottom. Now going back to the website, we're going to go ahead and go to mint now. And we're going to go ahead and mint a Homer node. We're going to click mint, approve and proceed. Now it's also going to give you some very important information right here. This Philosopher Citizen is redeemable for Dominium citizenship through the entrance into the Dominium School of Thought in our D app. Once a philosopher is staked in our School of Thought, daily rewards become available. Now there's two things that you need to understand in order to participate in the School of Thought, which is just staking. An initial tuition payment of USDC equal to 1 month's rewards is going to be required, and a monthly tribute of USDC equal to 10% of the monthly rewards is also going to be required. These fees are going to be applied to development of the project, marketing of the project, things like that, just to keep the project alive as well. Now you have the option again to pay in USDC or DOM. I'm just going to pay in DOM. Now we're going to wait for that to approve. And if this at all fails, it's nothing to do with the project, it's just Polygon's network sometimes is congested. And there we go, the mint was successful. Now we can go ahead and proceed to the School of Thought, which is going to take us over to their D app. All right, so we can see the current NFT that I got and an NFT that I already have staked. We're going to go ahead and roll this guy. And these are very important metrics as well. So are you sure you want to enter the School of Thought? Each NFT enrolled in the School of Thought will be able to receive its daily rewards. Admittance to the School of Thought requires a one-time tuition fee as well as a monthly tribute fee. Tuition cost is equal to 1 month of the reward value. So currently that's going to be $315. And the tribute cost is equal to 1/10 of the tuition cost, which at this moment is going to be $352. NFTs can be unstaked at any time and sold on the secondary market, but will require a tuition fee to enroll again. So if you do unstake your NFTs, the only reason you would really have to do that is if you want to sell them on platforms like OpenSea. Otherwise, there's no real reason to unstake your NFT. These costs are necessary to keep the school up and running. 100% of the proceeds go to defend the price of DOM rewards, liquidity, RWAs, and buybacks for long-term protocol sustainability. 20% is added to the protocol owned liquidity on DOM USDC pair, and 80% goes to the treasury for real-world assets and weekly DOM buybacks. All right, so we're gonna go ahead and enroll in the School of Thought and pay that fee. And it is working right now, waiting for it to approve. And it confirmed. And we can go ahead and check our NFT is now staked right there, earning me 2.3 DOM a day, and our other one is earning us 0.2 DOM a day. Now the tribute fees are going to be required every 60 days. So it's not like that amount is going to be hammering at you. And again, it depends on which NFT you get. Since this was the mid-range NFT, it does cost, $300 compared to this one, which was $30. And obviously the highest one will be $3,000 respectively. Also, another thing to note is when claiming, the first claim in the 30-day period is free. After that, it progressively gets more taxed. The tiered tax system resets to 0 every time you pay your tribute fee. This mechanic is designed to incentivize users to only claim once per month and increase longevity. This is the tax structure. So the first claim is 0%, the second claim is 5%, the third is 10, the fourth is 15, and anything from the fifth one beyond will be 20%. And it goes ahead and tells you what your current claim fee is. So I don't need a claim right now. There's no real reason to, so I'm not going to. So that's going to be dominium.finance, the first crypto project to integrate digital cryptocurrency with real world assets such as real estate and things of that nature. Guys, there's no other project that is currently like this. This is real utility. This is providing real income to the project. They're a very transparent team. And if you ever have any questions, they respond very quickly on their Discord. That's definitely something to check out. Their link will be down below. This is a project I don't think y'all want to sleep on. I said this on my Twitter several times. This is what a next generation project looks like. This is what a project that is innovating crypto looks like. And trust me, I am not trying to shill this project at all. I am just so excited that there's projects like this that are really trying to innovate in the game. And currently there is no project like this. Keep in mind, this team is still developing everything. So some things like their dashboard is not available yet. The staking of their DOM, which is another future implementation to help add to the protocol, is not available quite yet. and the bonding system of their protocol is not available, but these things are going to come. So go to their Discord, make sure you're keeping up to date on all their socials so you know when those things are coming out. Guys, this isn't over. I'm going to do another video with an AMA of the team. That way we're getting in depth on everything you want to know. So I know there's a lot of things in this video that I didn't cover, so that video is going to be saved for them to be able to speak about their project, everything that is currently going on in the project, all of the features, all of your questions. So if you do have any questions about this project, leave them down below. I will try to ask these questions to them for that AMA. Guys, if you enjoyed this video, please leave me a like down below and a sub if you really did enjoy it. It helps out with that YouTube algorithm and allows this video to go to more and more people so they can learn about awesome projects like this. I hope y'all have a great day or night, whatever time you are watching this video. And like always, have a good one.